All right, so this is the India market review for 16th February 2015. Uh, you should be able to see the screen. So AAP has won, and by thumping majority, as we all know, and the markets reacted positively to that, or anyhow they decided to go up, I guess. So that was a big surprise. The Ministry of Defense is on the verge of probably announcing maybe L&T and the consortium with L&T, I don't know who else, Tata Power, etc., getting that 40 or 50,000 crore order, which will of course not be a one-year thing, but whatever. That will be a big thing for the Indian defense side, really get a boost. And then Ukraine, right? So there are this peace talks which are going on, and there's a truce that's been announced. So that's one big thing on the global side. And the US has said that in case this all goes through, then the sanctions also on Russia could be, rolled back, which is a big sort of plus from the American side. So overall, things have been pretty bullish and positive. The only downside, if there is possible currency wars. So China now talking about QE, in a sense, quantitative easing for its currency, and US has retaliated by saying something about taking China to WTO and some stuff like that on some other issue, but on a subsidy that China has been giving it to some of its industry, export subsidy actually. So things might actually start to really look positive on the global side. Just 2 weeks back or even a week back, things were very, very different. At least I didn't expect things to turn out so positively and so in such a short order. But well, that's how things are, and the markets have reacted so far positively to the whole thing. So this is where it is, and I think now it's basically the budget. But my sense is, I don't know, I haven't been reading the papers in detail, but it doesn't seem to be much of the budget hype or talk right now with all this ARP and defense and all of that. So what will be the impact of the ARP election on the budget? Will they do some populist things? Will they roll back some taxes, or who knows what? Don't know. Oh, small news. 125 toll plazas to be removed across the country. Apparently some 60 or 70 have already stopped. I don't know if 125 is the correct number. Passenger and non-commercial vehicles contribute apparently only 14 to 15% of the toll collection. So they want to remove that, and they're talking about e-toll. So I don't know if any of the ones around Bangalore have stopped taking toll, but that's good news, at least at the retail level. Just go and charge the commercial vehicles. But there's also talk about 2% increase in some cess on diesel and petrol in order to fund infrastructure, and maybe a 2% cess on car sales also. So this is just, I think, talk that's happened yesterday or today. So basically that, I think crude oil slipped again globally, went back to $58, $60 a barrel, but apparently moved down again. Not sure about that. So overall things looking quite okay. IIP numbers were bad, sorry. Yeah, IIP numbers were, I think, less than 2%. So that's definitely not good news, not good for a healthy economy. But on the other hand, there was that news about, of course this is old news, 7.4% growth for India being predicted. So that's well at par with where China is. And maybe this whole thing about India now growing faster than China, maybe needs a little more time, but maybe it's on its way, right? So broadly, that's what those are the things I know. If there are any points that any of you would like to add, then let me know. I've put you on mute just so that there's less background chatter, but you can unmute yourselves if you want. So if there's anything, that or put in the chat box. So while that stuff comes in, let's look at our charts as usual. S&P. So the Nifty, of course, it's not the S&P Nifty anymore. the old symbol still going on. So one of the things to look at pure technicals is that those of you who here 2 weeks back we talked about this return line and the market hitting that return line and coming down, which it exactly did. And you know what? It's almost come to the trend line on Tuesday and then did a bullish engulfing. So that's something really interesting which is there, and we should really, the beauty of technical analysis basically that you've got all this stuff, the trend line from February of last year and how the market came pretty close to that. And for those of you who know about indicators and other stuff, that's our 50-day exponential moving average, and it sort of took off from there and formed a bullish engulfing. So markets are definitely looking perky right now and positive. The indicators are definitely looking strong, and it's back to good old times. So right now, going by this, the market could be targeting 8,900, 9,000 again. So that is where the old lifetime high was on an, well, why did that green line go there? Sorry, yeah. Okay, so this is where the old lifetime high was, and we could be targeting 9,000 on the Nifty again in the next 1 or 2 weeks. So definitely bullish. Could be looking at buying futures or calls, or definitely looking in the spot market, both from a short term and a long term perspective. Sort of Marubozu type candle today, and well, yeah, that's it. So that's on the bank Nifty, that's on the Nifty. Overall things looking quite healthy. So if you go to our sector indices, so the bank Nifty came to an important support of around 8,000, 18,600, slipped below that, formed the bullish engulfing on Tuesday, and then just bounced up. Actually, little unfortunate timing for the EQNS folks. When we did the live session, it was on this day, and the very next day things turned out to be really good. So some of the discussions we had on that live day session actually did come true in the way some of the stocks that we spoke about really bounced back from the levels we spoke about, and have, I think, some of them gone up about maybe 5% at least from that level. Just makes you think, and get a sense of how things can just change overnight. This of course, one might have said up and all that stuff, but all said and done, that's the market, and we are back to 18,370 on the bank Nifty, and I would be guessing all the way back to 20,000. Now, of course, nothing comes from the RBI till the budget is announced. So, oh yeah, this is the other news today, of course, the SBI. It went up. The news was overall good, I think. SBI result was today, right? If anybody has any update on that, then just put that out. All right, so all the bad news that came from so many other banking stocks, well, in terms of SBI, did a complete surprise, and I guess maybe the negative sentiment has now just gone, and SBI has reset the mood. Okay. Some more things. Okay. All right. Our forex reserves have hit a new high of $330 billion. So, yeah. I mean, looks like all good news all over the place everywhere. Okay. So banks up. Would be long on banks with first target 20,000 and then 21,000 on the bank Nifty. BSE power. All right. So that's really made a comeback, and possibly that's the trend line we could perhaps be looking at a little bit into the future. And if this goes up, then power stocks are definitely one more place to invest. big recovery. It was already something that we were talking about 2-3 weeks back, and I think just got reconfirmed. More so because just below that is the 200-day moving average where it sort of bounced out from. This time I think once power goes back above 2250, I just my suspicion that it's not going to come back down again. So power could be a very strong place to get in. Realty. Oh, this is really interesting. So realty didn't really correct as much at all as banks or I would say power for sure. So realty showing some strength. That's at least I'm surprised. And good, very good at a very good trend line, just above the support zone of 1600 to 1700. We've been speaking about that level for months now, and looks like now it's really set to actually perhaps move higher. And realty could definitely be a place from a multi-year perspective to be getting in. So that's the the sort of 6-year chart, and that's where we are right now. Nice double bottoms, extremely unlikely to come down. This is a really good technical picture. Okay. CNXIT, yeah, we've been speaking about this for some time, and that's just making new life highs. Really don't know what the reason is. Just leave it at that. But just to speculate, it could be a lot of things. Maybe it is defense orders, maybe it is American economy improving, whatever it is. But that's definitely a sector which is now leading the market up. Then mid cap, okay, this is interesting. So mid cap vis-a-vis Nifty is almost back to its life high. Nifty is still a little bit far. So the strength in mid cap that we've been speaking about is definitely continuing. There's no doubt about that, and that's good news. Okay, Nifty Junior, almost there. So mid cap is actually where the drama is. I think the small cap mid cap space is definitely great. This is CNX Energy. So actually a bit of a surprise that energy stocks overall have not really been doing that well given the fall in crude oil prices. But again, this is a mix. Energy has all this what do you say, mixed bag of stocks. One set which goes up with falling prices, another set that goes down with falling prices. The producers versus the users of the raw materials basically. So energy maybe would not look at it. I think power, realty, all that, and IT looking really good. Okay, so infra. So what you can see in infra is this 1-year downtrend now being broken. So we had a triangle there, nicely met. Again, how the 200-day moving average acted nice as a nice support. And even if you were to stretch this, this is now just breaking through that downtrend line. So looks like bad days for infra are over. Yep, could be going much higher. Of course, unfortunately, this is not the entire chart from 2008. This is just from 2010. Pharma. All right, so back to its life high, and wow, today gap up. Something strong happening in pharma. Wonder what it is. Is there some news? Not sure. Okay. But pharma is no longer the leader. It would be more the IT guys and uh, CNXIT, and maybe banks that might do that. But we'll just have to wait and watch. PSU Bank. So this is the big recovery after SBI. Okay, again, 200-day moving average. How the market sort of danced around that. And I think maybe PSU Bank with that definitive move back, and again above this very important multi-year resistance of 3,900, PSU Bank is moving above that. So this is definitely interesting. So the one big weak sector in the market, which is the PSU Bank, seems to have done a turnaround. Then okay, VIX will drop as expected. Yeah, that's it. So I think across the board all sectors are looking good. Okay, the favs would be CNX IT, Realty, Power, yeah, right, and all the others are still strong. I'm not saying no, and infra. Right, these are the ones which would be on top of my list to look at getting in. And we missed FMCG. Where did FMCG go? One second. Uh, oops. What happened to all this auto? Okay, sorry. Uh, so auto also recovering, and then consumer durables. We don't really track that, but that's also looking good. Capital goods. So that's again crossed that multi-year line, and I think many of the capital goods are going to make new life highs in the days and weeks to come. So that's again, look at this trend line. I'm just extending it, not changing it at all. How the market came there and recovered. So TA for you in action. FMCG, all right. So has perked up again. So there's some talk about FMCG companies now looking at urban India again and not paying so much attention to rural India. Okay. Healthcare and then BSE metals. So yeah, so BSE metal again downtrend line, just extending it, and it's exactly there, right? Probably the laggard sector right now, but this would be very, 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 very interesting. I think at least from the academic perspective, you should look at metals on Monday, Tuesday. Once this downtrend line is broken and once metal is above 10,700, you probably see strong moves on the metal side. And I think on the military side, as you know, we were talking earlier, we look at specialty metal makers, probably something that could actually make a ton of money, because no matter which consortium gets this, at least when it comes to hardware, there would be some who are into specialist alloys. So Bobby, that's one more list for you to track. Okay, and I think indicators, yep, indicators, if you remember, we were talking about this divergence, and this is definitely really going strong, right? The divergence, I fully expect this to break out tomorrow or next week. So I would say metals all set for the breakout. Mid caps, oil and gas leave. Yeah. And right, so it's interesting how things have actually now not come full circle, but if you've been in the IMR over the last 6 months, you saw how certain sectors, you know, were leading very strong. That's where the money was in, and gradually how some of the sectors like FMCG and pharma started to actually weaken. And while the other real laggard sectors like this realty, power, infra took their 6 months, 1 year to really build some excellent bases, after which they have started to actually, you know, create uptrends. And the metal is the last sector where the uptrend is not there, but it's very likely to happen, I think, in the next few months. And I would say that once again, I think we have an excellent foundation technically for the next phase of the bull run, I would believe. Um, if nothing, you know, really out of the blue happens, then globally and locally, I think if it's just business as usual and nothing else, then things will just start to move up technically. And last market to short now, should just be looking at longs. Okay. Okay. So I think especially us in the mentorship group we should really figure out a way to take advantage of this, because it's once in many years actually that you tend to get a setup like this, where even if you don't know derivatives and you're not happy with derivatives, or you find the profit or the risk of derivatives or the mark to market of derivatives unappetizing or emotionally difficult or financially not affordable, the risk, then at least on the long side, getting this amount of abundant opportunity is something that is very unusual to actually come across. So something you may want to keep in mind and consider for the future. All right, so for the next few years at least. That's it. So let's look at um, the index stocks, right? So starting with ACC. So as you can see, ACC has broken out of a double, triple top sort of formation. It already tried to do that in Jan, but didn't really succeed at that time. And this time convincingly gone up. And if you remember, this had been led earlier by Ultratech Cement, actually doing a pretty significant breakout, and that was the stock to be in. But now ACC has done that. Can't say it's done that on particularly great volumes, but nevertheless, new life high, 1600. Yesterday, at least the volumes were good. Technically, everything is looking okay, except the RSI divergence potentially. So I think there's some risk there. But after this Monday's fantastic candle, is just going up on its own steam, and probably the next stop would be 1750 or thereabouts. Ambuja Cement next. So that made a breakout much earlier, and so this is where it is, and it's, well, interesting that it's going up, but the volume's actually not there. So this is definitely a bit of a concern. Good for trading, maybe investing. One should really be a little careful on these stocks. You actually had a sort of uh, pennant or triangle here, which actually broke out. And so if one was tracking it, I think this was definitely trackable, tradable, and worth several thousand rupees in profit. If this happened Thursday and then Friday, today there's been a follow through. Okay, so let's look at Ultratech while we are at it. So if you look at that, that, like I said, did a breakout much earlier, mid of Jan, and kept didn't really, fall down much after that. So I would still say that okay, this is also now consolidated. Really good breakout on good volumes, came down on low volumes. Need to see a little more, pick up. But I would say Ultratech still on the long side, and next stop 3,500, maybe even 4,000. Who knows? Very nice trend line, which is there. I don't believe that trend line is going to break in a hurry. All right, so that's the cement stocks. Ultratech is still the favorite. Asian Paints, a little bit of underperformance there. Most of the result season is sort of coming to the end, and the next thing will be budget, and after that will be the annual results in about 2 months. So that will really be interesting. See again, TA in action. So I just put a line there and how it took support here and went up. So wouldn't really look at Asian Paints in a hurry right now, but very good stop loss at around 788, 785. One could go long, and 900, 950 could be the next target. So looking at our first bank. So Axis Bank, again, don't want to disturb this. See how that level, good support, and has started to go up after that. All right, so that's where Axis Bank is, 550. I think we're just going to keep going higher. Good, again going up on low volume. This is now becoming a concern, seeing too many low volume up moves. But a correction happened, so let's just keep doing some more and we'll get a sense. Bajaj Auto. So this was a flash trade, by the way. We saw that on the chart the other day on an intraday basis. This whole drama here happened in less than a minute, probably less than 30 seconds. This is probably some algo trade that really went wrong. Don't know if there's, would be interesting to just see if there's some investigation by SEBI or NSE going on into this as to, you know, what went, what caused that. In terms of trend lines, okay, let me just keep that because it's still important. We'll have another one here. There. So that will be the longer term trend line to for the market to eventually break out of, but as of now looks like it is taking support at 2200. It's below the 200-day moving average and could be forming a base, I think. Well, there's no divergence, so wouldn't be in a hurry to get in. If you like underdogs, yeah, this is a stock you could buy with a stop loss below 2199, and if it all goes well, then it'll rise once it's above 2400. So this is a high risk trade, that's for sure, and you should just be patient with how Bajaj Auto actually pans out. All right. Okay. So no need to jump in. I'm sure there are other auto stocks which are doing better. For now, it's at a good support at 2250, and you could look at just observing that for now. Bank of Baroda. So SBI obviously did something to the bank Nifty and the PSU bank, but Bank of Baroda is clearly suffering, no doubt about that. So I think we'll need to look at definitely some more PSU banks to have some better clarity, but definitely would not be in any hurry at all to be looking at buying at least Bank of Baroda. There's no need to rush into it. All right. Okay. Okay. So excellent support. Tweezer's bottom, by the way. So this low was 169.35 and this low was 171. So that's pretty good enough. And if you know if it doesn't break this, then should be good support. But this is 200-day moving average. That's where it really stopped out. You'll find many other stocks to actually go long on. There's no need to hurry on this. Okay, Bharti Airtel. Does anybody know when the telecom auction is? No idea. But it's at a really good support right now, and you know, once this holds, then Bharti Airtel could definitely be on the move back up again. Nothing in the volumes, nothing in the indicators, so I would suggest it's just best to wait and watch and see what happens. There's no hurry to get in right now. Buy only above 370. Otherwise, you know, could say short it, but like we already discussed, the markets are pretty strong. I don't think one needs to take this extra risk on this. It might underperform. Best to review this once the telecom auction is over. BHEL. Okay, so BHEL, I don't know if this news is all based on that defense deal that we spoke about. I would, okay, there's a lot of volume that's happened. So what, look at this, a lot of volume yesterday and today. I would not definitely want to be looking at it right now. If really depends on who got the deal, who didn't get the deal. I would say just wait and watch and let the clarity come out. It says that L&T has gotten the deal. If that's true, then let's wait. You've got the weekend to get more data on this. So Bobby, depending on you, give us an update. Call Parikar and let us know. All right. Okay. So L&T might be the one to buy. BHL may be the one to sell. Let's wait for the rumors. I think by Monday we'll have that clarity and then we can decide. BPCL. Okay. So BPCL again has come to a really nice support. As you can see, came there, took off today, formed a bullish engulfing, very good volumes. Wonder what happened. Something has happened on BPCL, no doubt about that. And one could definitely be buying it, though I suspect HPCL might be a better thing. I think we saw some research report earlier that for some technical reason and some uh, refinery related technology issues, the HPCL might be a better financial fundamental stock than BPCL. Okay. Okay, so 700 good support, could definitely buy it with a, I wouldn't want to put a stop loss actually in the sort of market that we have. I just say buy it and hold on to it. Okay. Okay. Again, so okay, Kane Energy. So crude oil sort of bottomed out at around I think 45 somewhere, and like I kept saying, Kane, ONGC, and Oil India, three companies whose futures fortune is really dependent on the price of crude, and the price of crude has sort of moved up, and because of that, it's quite possible that Kane has moved up. I wouldn't be in a hurry to buy it. There's a lot of technical divergence that gave us a lot of strength, as we had already spoken about earlier. And actually, if you look at volume also, you can see how in the last few down moves of the last end of December and mid-Jan, we actually saw the selling on very low volumes and then later on pick up on good volumes with 230 as a good support. And if one feels that crude oil is going to go up, then this is something that could go up a lot more. But crude being crude, as we all know, I would really be a little wary because of the fundamental side. But if you wanted, you could buy with a stop loss below 244, 245. It's only 258. It will face a lot of resistance in the 290, 300 zone, and then after that, we'll have to review it. Okay. Cipla. Whoa, what happened? Something big happened on Cipla today. Some news. Big volumes. Does anybody know? Don't want to say anything. This could be a nice massive shooting star. Something came out, some news and some fine print came out, and it got really sold off. So could be good, could be bad. I would wait for confirmation on this. This could be a tweezer stop that we are seeing here. We could see maybe, so if, let's put it this way, if Cipla closed at 680 plus Monday, Tuesday, it would be a buy with a very good stop loss below 610. That's actually quite a lot. I know it's 10%, but like we discussed at the beginning of today's session, this is a market where you really want to be long, and if you can't do it in the derivative side, you should do it on the spot side, right? So this is one thing, and then once 700, 710 crosses, then this could go much higher, but let's wait and watch. Coal India, wow, 377. So the offer for sale was really not much of a dampener, and big volumes today, right? So this is really interesting. Definitely buy Coal India. 400 next target, 420 would easily come in my opinion. I think that sort of volume is really, really interesting, right? So Anthony has put up a post saying Cipla wins major for AIDS drugs, major global tender. Then why did it go down? That's the thing. So there's some catch, maybe good emotional trading. That's all. All right. And then something about Cipla results. So this is the article that Anthony sent in. He is selected as a major panel supplier. So global fund ARV $189 million. That's 1,172 crores. Okay. Okay, so nothing much more here. All right. Then, so Coal India, definitely a buy. Coal, remember the coal auction, etc., and that's going to take a long time for things to settle down there. So, I don't know what happened. I haven't. Does anybody have any news on the Coal India auction? Then do let us do share that. Not the Coal India auction, sorry, the coal auction. Because things, I don't know what the update on that is, and even if those blocks get transparently auctioned off, I think Coal India could really have a heads up for a long time to come before, because by the time those get auctioned off, then things fall into place and technology infrastructure happens. Coal India has a massive lead, and there was some also talk about Coal India being broken up into smaller companies because it's such a huge, fantastic behemoth. And if that happens, there's going to be fantastic unlocking of value. So that's another thing to keep in mind in terms of Coal India, that if that takes steam, which is the breakup of Coal India to say 3-4 smaller companies, then, well, as a shareholder, you get baby companies, and this is could be years away, or who knows, next year, I don't know, but that's definitely going to create significant wealth. Okay. All right. DLF, so we said the reality could really be the place to be in. DLF is filed for some sort of a case, sorry, they were barred from approaching the capital markets, the directors, and they appealed, something happened, and they've appealed again or something, and that's probably the reason why the sort of candle. But a huge consolidation of the moving averages, both the long term, the short term. 150, I would say psychological, or rather 150 to 160, that's where it's stuck. And that's the, let me bring the multi here, right? Let me make it weekly. Okay, so this is where it is on the weekly chart, and 160, I don't think it's, so if I put the weekly trend line on the outermost, this is where we are. Be interesting to see if it breaks. If it breaks also, I do not believe it's going to go down in some large way, and is actually presenting, I would say, buying opportunities from a long-term perspective, right? Yeah. So sometimes, unfortunately, you put that in the weekly chart, but it does not appear in the daily chart. Okay, so as you can see, we're at a good support line, and I would say pretty close to the uptrend line. I think it'll break out. If you are a risk taker, then this is the place to get in with the trading stop loss below 145 and investor stop loss below 130. But if you want to be conservative and stick to the principles of actually, even with the principles of Doe theory, this is really good support. Where the cursor is would be nice stop loss area, and 180, 175, 180 would be a good short-term target. And once 180 breaks out, then 200 and much higher is very, very likely. Dr. Reddy's, okay, so something happened on Dr. Reddy's yesterday. We had good volume on yesterday. Definitely a buy, and 3,600, 3,650 would be the next target on Dr. Reddy's. Alright, trader stop loss below 3,150, and once 3,400 breaks out, then 3,600 is definitely on the cards. Gale, whoa, what happened? Again on good volume. Something happened on Gale. Some news, big move down. I need to find out. So if you needed a stock to short, then this is the one. But like I said, I wouldn't short anything in the current situation. I'd only look for longs. Once it's below 400, Gale is probably going to 385 or something, and then perhaps all the way to 375. So market's looking healthy, and gold starts to actually come down right over this week. Very interesting how it is, and you can see a nice tweezer stop there, high 2600 and a high here at 2598.80. So that's less than 0.1% tolerance. We're talking about tweezer stop, and things are back down again. So that's the gold bees. Grasim coming very close to its life high, and I believe it is setting itself up for a breakout, but might take a little bit of time. Looks like a flag, but a little too jagged for a flag with this correction that happened. But if you take 3450 to 3950, that's 500 rupees. Then after it crosses 4,000, then I think 4,500 is easily something it will do. This is looking like a pretty decent, strong up move. Slight weakness, consolidation right now, but once it's above 3950, I would put a SLTP buy order or a trigger alert at least to let me know it's at 3975, and once it's above 4,000, then definitely buy. At that time with the stop loss maybe below 3850 with the target of 4,500. That's easy 10%. Next is HCL Tech. So that's been making new life highs. The IT index has been making new life highs. If there is something about HCL Tech, there is this massive window which is, on there on HCL Tech, and as we all know, candlestick says windows tend to be closed. Now for that to happen, HCL would have to come back to all the way at around 1,650. That's a big move down, right? Let's close this, right? That's a big move down. Don't know when that will happen, and we should probably just wait for it's a high risk trade. Let me just put that. So at some point it's going to happen. Don't know when, but it's looking like a flag right now, and one might want to look at 1750 to 2000. That's 250 rupees. 2250 would be the next target. You could go long now with a pretty good stop loss, I would say, from a trader's perspective, below 1900, right? HDFC. All right, so I thought that is life high. Why is that? Yeah. Oops. So too many studies done not. Should clean it up. So HDFC went up, consolidated, came back down, and is in a sort of triangle, I would say. Not really textbook, but that's how these actually are in the market often. Little tough to draw this one. It could be that. And next week it has to break out of this. Really not much more time left for this to make a decision. And if you look at it, it's almost 150 rupees, 150 rupees, either up or down from a symmetrical triangle. Let's look at volumes. Yes, voila. Volumes have been coming down. This is sort of the picture that you want on a triangle. So there's a really not textbook, but like I said, but a pretty good enough symmetrical triangle to look at, with a very good tradable move of 130 rupees, which is about 10% plus from the current market price, 1250 psychological level. So how these numbers sort of act as psychological numbers around which the stock pivots a little bit, 50 rupees, 100 rupees plus minus, and finally it'll make a move. And when it makes a move, then it's a fantastic trading opportunity. Would definitely recommend doing something on the derivative side with this, where you could make quite a bit of money. Right? Okay. Next is HDFC Bank. So that's been making new life highs. Really nothing much to say. Once this bullish engulfing happened, once it breaks 1200, 1100, then definitely going higher. It's just consolidating. If there is, I don't know if any of you noticed, today's IMR is woefully lacking any stop loss discussions. That's just how the market is. Any stop loss that you put in a market like this either will not be hit, or if it does get hit, very possible that you're going to regret that stop loss, because move down a bit and then market will move up swiftly after that. This is a time when sometimes if you really feel risk is there, doing something through derivatives makes much more sense, because there's protection, but you don't get out of the market. And if things go back in your favor, then well, great, just keep holding and cut off your protection, and the profit still runs with you. So stop loss on this would be, if required, around 1022, but again it could come to 1000 and then bounce off. That's the problem. And just buy it. Hero Motors, so bounces off the 200-day moving average. So but not going up on really good volumes. I'm a little wondering what's going on here. Both Bajaj Auto, Hero Motors were shorts that we had in the last few weeks, and after that the market has slipped, but has taken support at 200-day moving average, again at 2750 psychological mark, and a multi-month at once upon a time a life high, and now taking support on that. Pretty good support actually. It's almost about 7-8 months. Only volumes are missing, but there was a really strong bullish divergence on this, on both on the MACD, RSI, stochastics. And once it's above 2950, then easily going up to I think 3100 or 3200 on Hero Motors. Okay. Hindalco. So metals, definitely not looking at selling metals anymore. Nice double, triple bottom here, tweezers, triple tweezers bottom, I would say. And okay, today's volume a little shy, but I think this is really setting itself up for moving up. And I would say buy Hindalco. First target 175, next 185. Okay. Then HUL. Okay, so HUL is looking like a flag. Wow, definitely like a flag. Some massive buying happened in Jan. Not sure exactly on what account that was. This is what happened to HUL. It's too long a flag to be actually too comfortable, but it is an uptrend flag nevertheless. Just track it, and if it breaks out, looks like it's not going to go below that level, which is at around 885. And if it breaks out, then 950 is definitely on the cards. You could do this trade with a stop loss at around 870, 865, but again it could come to about 860 and strongly bounce up from there. Okay. ICICI Bank. Okay. Really good bullish engulfing. Look at this. The green candle here, very good volumes. Now a little bit of hesitation, but still I think it'll do for me. And one could go along an ICICI Bank with a stop loss of around 325, 322, and actually better to maybe wait till it crosses 350, 355, then buy it, and then 375 I would say is the next target for ICICI Bank. Again, the brilliance of TA. Here's your support resistance line that we had put from July, and see what happened to the stock on Tuesday. Came on Monday, Tuesday came close to that support line, also the 50-day moving average, and has moved up there. Volumes are lacking, but like I said, the story on IDFC is to just keep buying as much of it as you can till the IDFC Bank demerger happens somewhere towards the end of this year, almost guaranteed to make you a good amount of profit, right? So don't miss out on that. Have an SIP running on IDFC. I don't know, whatever you can afford, just keep buying it on your spot market. Okay. Okay, so that is the longer term trend line. Okay. IndusInd Bank. Okay, so this is one of the banks which is definitely outperforming. If you wanted to be in the banking stocks, then this is one you could definitely look at buying. On the verge of making a new life high. Volumes a little bit lacking, bit of a concern, but I think the uptrend has been reaffirmed, and everywhere, left, right, and center, across all stocks, all sectors, you can see that Monday, Tuesday had a good bullish engulfing. All right, so the uncertainties seem to be out. First target would be 900. I think once this 900 gets crossed, then IndusInd Bank is definitely gunning for 1,000 rupees. So a cool 10% is easy. And then those of you who've been around on the IMRs long enough, you know about this, you know, when stocks make a sort of different level in terms of becoming from 3 digits to 4 digits, and then we'll talk about that again when we get there. Okay. Okay. I'm just going to take a half-minute break, get some water. I'll be back. So IndusInd Bank, let's say buy 1,000 is the next target, like I said. All right. Infosys, so that's been making new life highs with the rest of the IT pack. Massive restructuring going on there, right? Somebody I know in Infosys who's been there for donkey's years, saying a lot of changes, a lot of SAP people coming in at the top, and so I'm not sure whether the market is reacting to that or something else, but Sikai is doing some big time reorganization. Whether that pays off or not, time will only tell. A little bit of hesitation here on Infi, so maybe just a pause, maybe a correction would be a good time to get in, because the volumes, as you can see, have actually been dipping. So really no massive hurry to get in. Maybe just wait and watch. ITC, this is why the FMCG index went up today. So you can see ITC jumped up, wondering if there's news, jumped up on good volumes. And once it crosses 380, 385, then 400 is a distinct possibility, right? Oh, by the way, one thing to just bring to everybody's attention on ITC and the budget, inevitably some tax or something will be increased, and when that happens, you know, ITC stock will just fall massively, maybe even 10% or something in a day or two, but inevitably the recovery happens on ITC. So if that happens this budget, you know, just snap up whatever ITC you can, because quite honestly, it's you know, one of those companies which is really well run, diversifying massively into a lot of non-tobacco products, as you already know, and a lot of these things are going to make them a lot of money in the years ahead. So from that perspective, definitely a stock to be in. From a technical perspective, once it's crossing 380, should buy with 375 put. Actually, I just wish, you know, more of you were into derivative side, because this is a sort of market where you don't want stop losses. You actually want to do anything on the derivative side so that you can actually ride the volatility also, and in case something goes wrong, you're also protected, right? But anyhow, we'll just have to wait on that, I guess. All right, so 400 is the next target for ITC. Looks like it's going to happen quick time. Jindal Steel. So this has been going sideways, as we all know, for 4 months now. And metal, been saying metal is the perhaps the underdog, the last one to not move up. And well, it's forming a multi-month head and shoulder bottom. Alright, so it disappeared. So let me just draw this out for you. Inside there, here somewhere in October month of last year is the left shoulder. This is the head, which took 2 months to form, and this is the right shoulder, which is taking 2 months to form. Once this goes up, and that's your neckline, okay, then you can expect a move of that equivalent. So that price is 168, 170. This is 130. So we're talking about a 40 rupee, 30 to 40 rupee up move that is distinctly possible. You could also call this a rectangle, no problems with that, right? And either ways, the measuring implications would more or less be the same. So nothing great on the volume side to report, but most certainly this is building a base for it to move up. The bigger move will happen once it crosses 170. So again, depends on you whether you want to take the trade now or the investment now, or wait for the resistance to break around 170, 175 before you buy it. Very definitively, one thing is there, that this is setting up a really strong base for it to move up. Again, if you go back to your notes on Doe theory, one of the things we say is about the long-term multi-year downtrends. Here you have one, and you have this downtrend line literally drifting off into space. You could actually put one more here if you wanted, and let's just put that there for academic interest, and we'll probably be reminded of that in the months ahead. Extend right, and I'm just going to maybe slightly different color, because one day that will also break, and that will be a definitive move of the market actually moving up. All right, okay, yeah. So you can either wait for the breakout to happen, or you can get in now, and I think 125, 120 would be a really good stop loss. Though I right now, and the present circumstances, really are not expecting that to happen too soon. All right. Kotak Bank, so again went up, made a sort of rounding top, came back to its old support. And if you actually remember, this has happened so often in our charts today, that the market has taken off on Tuesday at the level of a strong support which had already been there on the chart. So the charts were already telling us, so maybe AAP had nothing to do with this. The market was anyhow going to go up, and it just was looking for an excuse to do that. Let's take this trend line and just extend it, and you can see how beautifully it just comes and sits there. All right, so it comes, it sits there, it's at that level, and well, all set to go up. Why is that? So the market is not really at 1500, but I guess that's the next target. So this is another bank, IndusInd Bank, the other one being Kotak Bank, being banks which are technically really strong. L&T, so L&T still going sideways, big rectangle from last June, and I believe that once this breaks, then 2000 is the next target on L&T, right? So Tuesday, I think this was results day, came down a bit. Yes, Tuesday results came out after up, and has recovered a bit, but some hesitation. And I don't know, none of that defense deal stuff has shown anything on this stock right now. But this is that multi-year breakout. It's happened, done a consolidation. Let me really say something. Perhaps I will regret, and maybe I shouldn't say. Well, then common sense says you should not say it, but let me say it anyway. I'll go with the heart this time rather than the head. So 800 to 1800. Now we don't talk about flags in daily or weekly charts, sorry, weekly or monthly charts, but that's exactly what I'm suggesting. 800 to 1800, it did that in about 1.5 years, and now we have sort of sideways consolidation for 6 months plus, and I am just sticking my neck out and saying that in the next 1 to 1.5 years, this is a stock that could be another 1,000 rupees up, which means from a 1800 rupee breakout, we are talking about 2,800 to 3,000 rupees in the next 1.5 to 2 years. So we are talking about the end of, let's say, just to be a little conservative, 2017. Okay, this could easily be a 3,000 rupee stock. So, well, you may want to consider, I mean, you may want to think about what you want to do with that. All right. Lupin, okay, so this is why it's shot up. Lupin. Massive up move today, but you got a hanging man. Very nice cross actually. But the breakout happened mid-December, mid-Jan, sorry. 1500 broke out, it's gone to 1700, stopped out. Massive volumes. Again, I wonder if there's some news around this that has happened. Don't know. M&M, oh, there was some news about M&M and armored vehicles, I think, or did M&M, there was a thing about the M&M Bolero, not Bolero, Scorpio, and the Tata Motors Safari, not the Safari, it's called the Storm now. They were shortlisted on the technical, they both passed the technical trials of the Indian Army. And there is now going to be something about which company gets that order of some 3,000 plus articles. And if that happens, then it could be a big boost for one of these companies. So Anthony is putting up a link for us. Economic Times, M&M to acquire Piper Defense in a 3,000 crore deal. So this came out at 7 a.m. yesterday. Okay, so I'm not sure whether this has anything to do with today's move, but who knows, it could. So there's a company, by the way, so we now know, Mahindra Defense Systems, which supplies various types of launchers for ships along with systems and components other than the Indian Navy. Okay, so this is good. I mean, I don't believe Mahindra Defense System is a listed company. One day it could really become one, and well, we'll have to see. Something about consolidation in the defense sector would definitely be a place to watch. Okay, so all these big groups, Reliance, Tata, M&M, etc., are all in the race.
What does it mean? Like, I mean, they bought so much stake, so what is the consequence? I mean,
the consequence basically would be that, see, M&M, whatever little I know, would definitely be a much bigger company than Piper Defense. And M&M already had this, where is that company? Mahindra Defense Systems, so it would be a fit in terms of, already supplying launchers to ships. So Piper is into what? Defense and offshore engineering. It's just more skills under one company, therefore the ability to bid for bigger, larger orders, because when it comes to defense, one of the things that is definitely the government looks at is the capability that the company has in-house. So while the consortium approach is popular, but if you are one company, you just have to deal with one, you're better integrated, you're not dealing with a potential, I don't know if Piper Defense and MDS are potential competitors, but now with the takeover, this you took care of one competitor. So you've got this consolidation happening. Consolidation means larger companies, better balance sheets, better ability to borrow money, better ability to get into larger joint ventures with the more reputed companies in the world, more technology in-house, less competition, fatter margins. This is the whole thing. I mean, and that's going to be a theme, like this article is saying, I think for the next several 6 months, 1 year, 2 years. companies being taken over and to form larger ones. And this is just the beginning. And those larger companies will get larger orders down the road. So from a multi-year perspective, it just makes a hell of a lot of sense to look at consolidation. Right? Too many small players.
So now,
Too many small players, in my opinion, in the Indian defense thing, and with the government looking at make in India thing and doing that big, many of the small companies will just not be able to survive because they're small. They may have excellent technology, but they will not have the scale or the ability to deliver when it comes to doing something 5 times bigger or 3 times bigger even. And that's why they will need to become bigger. Right? So one of the things could be just sharing infrastructure. So Piper has something, MDS has something, you have the same infrastructure, the factories, the tooling, the people and all of that. You can do a hell of a lot more, not only just in terms of different products, but also in terms of volume. And that's, I think, both of these issues are something that is going to be very, very much required in the years ahead on the defense side in India.
okay, but Pipavav still stays Pipavav. I mean, or does it?
I don't know. I haven't read the whole deal, but if it's acquired, then it will not be. You'll have to see. Okay.
Okay, I'll just add on to what you said.
Because it says 19% stake from the founders, so it's not being merged into MDS or M&M. It's just a stake sale. So it's Piper will still remain Pipavav. Sorry. Yeah. Go ahead.
Okay. Yeah. I mean, they had a lot of new licenses. There's something called industrial license for arms, and they made some changes. There are some they've removed, some products they removed from that, and then a lot of pending licenses were cleared, like in one shot. A lot of quick clearance. And Pipavav will probably diversify. Right now, they are major into ship and submarine.
Okay.
So chances are because the license is cleared, they'll move into other stuff also.
Okay, got it.
I have a list of that actually. I've taken a printout because I downloaded so much. I'll get that listed.
All right. So looks like a lot of good work for a lot of us. So I don't know. I'm just putting this idea out. If you really want to crack this and find the really big picks, we need to really collaborate and form a team. So that will happen as part of the mentorship program anyhow, but I really doubt whether the 4 people who are there in the mentorship right now, even if we did full time, we'll be able to pull it off. There's massive amounts of research to do. So if you're really, really committed, really, really seriously interested, can put some serious time and effort, then let us know. Maybe we'll have to figure out something. That I think is my sense of it. We don't have the foundation properly in place, but we need to put in the processes and all, and we'll do that. So I think there's some interesting learning curves in the weeks ahead. All right. Okay, great. Thank you so much, Bobby. Is there anything else you want to add?
No, nothing right now. What I'll do is I'll go back. Like I said, I've stopped hunting, and I'll go back and see what I've got and make more filtered down list.
Great.
And we'll just discuss defense. I'll take some printouts and we'll discuss it probably.
Okay.
I'm guessing next month end. Hopefully.
Month end is too far in times like this. Anyway. Okay. Okay, fine. We don't want you going back into a zombie state, so fine, take your time.
Okay.
Okay. No, for those who didn't get the joke, Bobby is crazy. I mean, in a nice way. Okay. He will go down any theme and he will download 500 URLs, and then he'll think he's going to read those 500 URLs in the next 10 days, which I know is impossible. But that's how he is, and he's really unique in his ability to go down these these thematic guys. He's probably the only guy I know who does the things the way he does. He doesn't look at technicals, he doesn't look at fundamentals. He'll pick up a theme, and his favorites have been defense and specialty chemicals and some bit of auto, but I think auto fell off his favorite list right now. And he knows a hell of a lot of companies which are completely below the radar, are not in the index, and there's some damn interesting companies, I can tell you that, and I've come across a lot of names which I've never come across in my life before. So that's his talent, and that's what he should focus on. But I can get your brain you could put an egg on his head and probably cook it when he's in one of those one of those zones, and if you fry your brain, then well, you know what, it's not good long-term health. So he's taking a break, I think, or I think he should be taking a break and let his brain cool off and then get back to doing things at a little more moderate level. and all. And if there are people who would like to support him, that would be great actually. Yeah. All right. Okay. So cool. So M&M, I think if this is Pipava, this thing, so it's not being merged. It's really good stuff in terms of what the future of M&M is. Bobby, just do one thing. Just go and look at M&M's website and see if MDS is a subsidiary of that. All right, Mahindra Defense Systems, or Mahindra Defense is a separate standalone company with no links to M&M, because this article doesn't really clarify that, right? Because it talks about two companies, but it says M&M is taking over. Then how is MDS connected and all? You know how the whole thing works, right? All the interconnection, because we basically want to know who's going to make the money. Some of these could be private companies, and the promoters actually make money, and we have no way of riding that bandwagon. Okay. Okay. Next, Maruti. So Maruti, I think, back on track to making new life highs. Very interesting article in Business Standard, I think, in the last week, about how Maruti is now changing gears and now having really a fantastic hold on the mid-cap segment. It's now, what am I saying, mid-cap segment, sorry, my brains are somewhere else. On the small car segment, hatchbacks and all, now it's looking at the bigger cars, it's looking at mini SUVs, it's looking at lower end commercial vehicles, and if it does that, then that would really be something that Maruti is getting into the next move. Okay, so let's get to this Mahindra. Thank you for this link, Bobby. So this is Mahindra. But is this Mahindra and Mahindra is just what I'm wondering. So it's got these companies: Mahindra Defense Division, Mahindra Defense Land Systems, Mahindra Defense Naval Systems, and you can see that this is a Mahindra Group website, right? So this is really fantastic. So as you can see, they are into aerospace, aftermarket, agribusiness, automotive, components, construction equipment, consulting services. In defense, they're all into this: energy, farm equipment, financial services, industrial equipment, information technology, leisure and hospitality, logistics, real estate, retail, and two-wheelers. Now, did any of you know all this? Okay, Bobby, thanks. Carry on. I didn't know this whole list, so this is really, really good. Just finding out one company like this every day will take you very, very far in your knowledge and your ability to find some really great stuff. By the way, in this picture, these alloys that you see are very much like the Scorpio alloy. So this vehicle is probably built on the Scorpio chassis and things like that. But leave that aside. So what we really need to know is, how is this company linked to M&M, because that's the stock we can buy, right? So somebody, if they were to dig down into the financial network of M&M, then that would really help in terms of getting a much better perspective on how to read this defense news, which is going to just increase exponentially in the weeks and days ahead, right? Okay, so back to Maruti. So as you can see, we're talking about Maruti doing some major new stuff in the automotive space, and right now 3,350, 3,300, excellent support, and once it's back crosses 3,750, then I think 4,000 is definitely on the cards. All right. Okay. NMDC. So I don't even know what this is now doing. It's consolidating actually very clearly, and I think preparing for a breakout. So this is again metals, minerals, that sort of stuff. So you could club it in the, I don't know if it's part of the BSE metal index, right? And once this breaks out, which I think it's preparing to do, okay, so volumes are not there, but the base formation in my opinion is pretty strong, and I really doubt it's going to come back down to 130 levels. You could, I would stick my neck out and say this is like, heading to 150, 155 goes, then 170, 175 could come very easily. Could happen not this month, but most probably next month. NTPC, really don't have much to say on this stock. Once 145, 150 breaks out, then 165, 170. These are stocks which, you really need to be a very, very, very patient guy with stocks like this, and I'm not sure why you'd want to put your money in this. Just you've got stocks which are moving much faster. But if you don't, if you like the security of knowing that you're in a sort of the India's largest electricity company and all, then yes, definitely go down this road. And in a sense, though it's very vague, yeah, it's too vague. Let's not do that. I was talking about imaginary head and shoulder bottoms. It's not that. But 135, 130, excellent support, and once 150 breaks, and I think 170, 190 are pretty good opportunities in the months ahead. ONGC, so okay, so that's falling. So interesting. While Kane was going up, ONGC has really not done anything. So wonder what the disconnect is or what we're missing in this. So it's purely not crude oil price, obviously. There's more to it than this. I just wait and watch big volumes today. MACD negative crossover on top of that. I just put an alert at around 3:30 and we'll take it from there. PNB, as you can see, no move, just like Bank of Baroda. Just stay away from this. Power grid, okay, volume pickup, something is happening. 150 broken on good volumes, 170. Buy this on Monday, especially for traders. You're likely to get a good swift profit on this. Something is cooking up in power grid in my opinion, right? So, and where should your stop loss be for this? I would say for a trader, put your stop loss below 147, and if you're an investor, then put it below 138. All right. Okay. Reliance Industries. So much happening, but this is one stock, as you can see, really has not moved for too many years now, in my opinion. Really wonder what's up with it. Long-term downtrend would be that. And as of now, this is going to be a little challenging. Let me clean this up a bit, sorry. Too many lines. Okay. Alright, so I hope you see this. Okay, let me just this fall, this happened on high volumes, then this rise here from year to year happened on good volumes, and then this last fall happened on terrifically low volumes, but the rise is not happening on good volumes again. But overall in Jan, I would say there's been some sort of accumulation that has been going on in this stock from a long-term perspective. This is a weekly chart, and on the weekly chart you have a tentative MACD crossover which is happening, and essentially what you're seeing is a lot of strength that is very slowly being built into this stock. The real thing move would happen only once it's able to break this 960, 940 to 960 zone. But I would say, sticking my neck out, you could buy this with a stop loss below 890. You'd need to be patient for it to cross 940, 950, but once it's beyond 960, then 1000 rupees is definitely on the card, and then 1050 could also be there, right? Yeah. 50 we did. So State Bank of India, right? So massive move today, results obviously, and really good volumes. So that says it all. You could expect this to actually move up maybe more on Monday, and this would have been a fantastic intraday trade had we been sitting in front of the system. I'm sure you would have captured several thousand rupees in profit today, and still probably be holding on to this. And once it crosses that mark around 315, 320 zone, then I think it's just a question of it making a new life high. Remember that the old life high was in 2010, and then this is just on its way to 400, 500 rupees a share, in my opinion. Right? Okay. SSLT. All right. So that's also forming a base, and once it's above 220, then definitely higher all the way to 230, 250 is what's on the cards on SSLT. Sun Pharma. All right. So Sun Pharma 940 buy. The Sun Pharma is investing into some news about it buying Suzlon, right? So the founder's son in talks with Suzlon, potentially buying it. Looks like a flag to me here. Right. Not very clear on the volume chart, but yeah, that's a big up move. That's a correction, and that's from around 840 to 940. Let's say 100 rupees. I would say first target is 1000, then 1050 is the target on Sun Pharma. Tata Motors, so bad news came. That was the bad news. Tata Motor results. You could see how it took support beautifully on the old Li-Fi, and then has just gone up from there to that price. I would say buy it. Very good stop loss below 535. Next target 600, and then once it's past 610, then 650 and much higher. There's a news about Tata Motors wanting to release 100 commercial vehicle models in the next 1 or 2 years. That's massive. And with the recovery of the economy, definitely fantastic news in terms of what the future profitability prospects of the stock might be. Tata Power. Okay, so I would stay away, though we said Tata Power, or rather power stocks, are really good. Has the potential to make a rapid move. Downtrend being tested as a support several times in 2014. Hopefully this is the last test. Don't know. Too early to say, but there's been some big volume selling. I would just say wait for the breakout to happen above 90, and then we will review. Tata Steel. 350. Still, I think Jindal and Hindalco and SSLT are probably better picks right now. Little too weak for my comfort to say that you should buy it. Though those of us who understand divergences, no, I'd say just stay away from Tata Steel for now. Will probably become a good buy later, but it's not at this point. TCS, yep, you should buy TCS. Massive move today. Increasing volumes at that level at around 2400, 2500. Why do we have two irritating lines here? Okay. So symmetrical triangle, head and shoulder that failed, all these things, mostly a sign of strength when something like this happen, and might require some patience, or better buy it above 2600 for a quick move to 2670 and then to 2750. But at 2450, this is really good support. Also notice 200-day moving average and how it came to that level on 10th and took support on that, not only the moving average but that support line, and then bounced up today on volumes were okay, good, I would say. I'd say again selling happening, buying happening. Of course, selling also has to happen. But looks like this will move up. Wait and see. Just best to be safe. If this breaks down, by the way, for some reason we go below 2400, 2350, then this could easily fall to even 2200 or 2150. But given what all the other IT guys are doing, unlikely for that to happen. So Tech Mahindra back to its ways of making life highs. It had paused for a while. Okay. So you could buy, one sec, sorry. So Tech Mahindra would be good to buy after it crosses 3000 in my opinion. Once it does that, then it'll start maybe just moving up in, bunches of 50s and 100s after that. Finally, Ultratech, we finished that. Then Wipro. So Wipro making new life highs, good volume build up. So this is what you'll probably see after a little while in TCS. Again, big issue I would say would be the candle here, sorry, window here. Okay. All right. And lastly, Z. So Z going sideways, 350, 390, took support, maybe nothing great actually in Z. I would say stay away from it, though the buying is definitely happening on good volumes, and you could buy it above 375 with a stop loss at around 360, 355. First target 390, 400, and then we will review. Yeah. Okay, so like I said, we've come to the end of today's session. IT was something we mentioned right in the beginning, and now just any IT stocks, the bullish candles are there. In the auto side, look at bullish windows are there in quite a few IT. On the auto side, stay away from the two-wheelers. The four-wheelers definitely looking much better. SBI has done a fantastic recovery, but the rest of the banking stocks, at least the public sector banks, are something that you want to avoid at this point. And what you have is metals, JSW Steel, stay away from Tata Steel, Hindalco, all that, all good. Power, Reliance Power, Tata Power, we didn't do Reliance, but stay away. I think for now still needs a little bit of more technical evidence. But realty and capital goods are definitely good to look at, right? Okay, so that's it. I'd like to wind up here for today. If you have any questions or any stocks, then maybe. So tomorrow is the free to dream. Remember that in case any of you joining, then to come over for that. Okay, send your friends, let them know, and we have the mentorship session review at introduction from 11 a.m. to 1 p.m. So if you're interested in that, most welcome, right? Okay, so that's it for today. The recording should be up hopefully by tomorrow afternoon. I'll send out the links to all of you, and you can review that in detail later, right? So thank you and good night.